Good morning, everyone, and welcome to Morning Market Movers, where we do live analysis for day trading and look at hotspots in the markets for today, 420. Yay, it's 420. It's honorary marijuana day. So we do have some hotspots in the markets. We do have a lot of things moving that we want to discuss this morning. What we're looking at, one, we're obviously going to have to talk about several things if you haven't seen all the news. One, U.S. interest rates as the yield curve goes higher. Brian's got comments from some of the Fed governors. U.S. interest rates are going to go up. They have to. We've been talking about this to curb inflation. That is having impacts in the broader markets. We are seeing gold continue to go lower. Higher interest rates makes it more and more expensive for someone to hold gold because gold is not a performing asset. It doesn't give you interest. There's no dividends. So it's what some people often refer to as dead money. It's in there, but the value of gold goes down. Interest rates keep going higher. So we're seeing pressure in gold. Yesterday we spoke about um, the yen. Well, the yen actually got up right near that 130 level against the U.S. dollar, and uh, this weak yen, it got up near there. Those are levels that it hasn't been for 20 years. I think the last time the yen was the dollar yen was here was back in 2002. Now, out of Japan, you're still hearing, "Hey, we're going to keep a weak currency. We love a weak currency." Well, their finance minister, uh, Sunichi Suzuki, finally started warning. Yeah, the the damage to the economy from this weak currency is now greater than the benefits from it. Brian's going to talk about that. They've been saying that for a long time, but now Japan's going to have to do something. We did see the yen pull back a little bit with these comments because it's getting out of control. So much like our interest rates are getting out of control, Japan worries that their 10-year interest rate gets above 0.25%, they start panicking, and so they keep buying bonds. But I don't know if they're going to be able to sustain that dovishness for a lot longer. So we've got the yen, we got gold. There's the Netflix news. Oddly, the market's kind of shaking it off, but Netflix down between 25 and 30%. You're seeing other subscriber service companies like Disney and Roku getting smacked pretty significantly, but the markets are shaking it off. We see equities broadly looking in the green, which is amazing. The Nasdaq can counteract a move in Netflix like that. So those are just some of the things we're going to talk about today. There is a lot to discuss. There are some opportunities to trade in the markets today. We've got some volatility. Before we jump into it, I'm going to flip it over to Brian here in a second, but I do need to share that trading involves risk. It may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. And the one chart that I wanted to bring up here is you can see the yen up near that 130 level. It did back off after they started making, their finance minister made some comments, but they're also saying that they're going to still do unlimited purchase of assets, quantitative easing with 10-year yields around 0.25%. Let's see if they actually really do that, or if they're going to let this thing go flying. Brian, let me flip it over to you because there is just a lot to cover. I know Bullard made some comments. I mean, the interest rates, the inflation, it's going to start having ripple effects.
Yeah, I mean, to start off the morning, I mean, the one this is like the one day where we do actually have some data, economic data, was CPI this morning, and CPI has been one we've been following. Remember the United States data, the core, the core CPI rate, which was what Bernard was talking about. It's like, look, what we're doing is working. And then we saw the PPI basically was double what the expectation was. So she was kind of cherry picking some data. You look at CPI across the board in Canada, it all blew it out of the water. It was all much, much higher. The overall CPI number month over month was supposed to come in at 0.9, came in at 1.4. So not quite double, but not super far from it either. Later on today, we do have CPI for New Zealand. Again, opposite side of the world. We don't trade it at Nadex, but again, it is a quarterly figure expected to be up from previously 1.4 to 2.0. Why it's important? They've already raised their interest rates, already chunked it up there pretty high. I think it's
Right.
1% now. They're already there, and they're still seeing it continue to move. With that said, there is a couple things that, again, we need to bring up. One, yes, Bullard. Bullard talked yesterday, and he says he would like to see rates up at 3.5% by the end of the year. Some interesting things in this article. They talk about how kind of the current, what the year-end pricing right now looks to be in the 0.25-ish range. I've seen 0.225 and 2.275. It's kind of where they think it's going to be. Yesterday, he also made comments about how the 0.75 for the next raise is not off the table. Remember, he was the one person that voted for 0.5, and now everybody's like, yeah, 0.5 may not be bad. So again, he's got his finger on the pulse and kind of has a clue.
Yeah.
It's like, imagine him in this meeting, maybe we should do 0.5. And he's like, did anybody hear what I said the first time that I've been screaming for the last,
Right.
And it's not just him. The IMF, we knew we had meetings all this week. The IMF is also warning of further market sell-offs as central banks adjust. And they said, obviously, the Russian attack has made things a little bit crazy. He's like, but with further supply chain shocks and energy price rises, this is certainly a risk for further sell-offs. So they're already telegraphing it on a world, and it's not just the United States. It's more market sell-offs as central banks try to combat higher inflation, and ease back on pandemic stimulus measures. So it's a kind of a global thing right now. Everybody's talking about it. The real question is how much is really factored in. The other kind of news headlines we've seen is obviously a lot of the BOJ stuff. We talked about, for 3 weeks they've been screaming about weak. And I mentioned yesterday inside on the charts, like, listen, you got to be starting to look for places to short this, right? I drew just kind of a buffer around that 130. Everybody knew that 130 was the telegraphed area. It made it to 129.40, and then all of a sudden dropped 150 pips back to the downside. So these are the type of moves that we're looking for. Again, they haven't intervened yet. They will. Suzuki, I think it's Suzuki, right?
Yeah.
Yeah, the minister. He's not the central bank president, but yeah, he's the finance minister. So it's kind of almost like a Yellen, not necessarily as important, not as a central bank figure, but basically made the same comments. A week is not necessarily,
Yeah.
there's a week and there's a 2 week, and that's where the 130 figure came from. And all they have to do is really basically intervene in the market, raise the interest rate, which what everybody else in the world is currently doing. So they like a weak currency, but again, the 130 figure is where it gets a little bit too weak, and it does hurt them in some sense, some areas. And that's what he was saying yesterday. Is like, 2 week is sometimes and it's no different than what we've heard for the last 3 weeks and all this. But again, this is one of those magical numbers up there. Had you gotten into something up here short, and I mentioned it, like, listen, there are weekly contracts where you could start taking some shorts. As this thing goes higher, it will fall back down again. It's not like this is not like the Fed trying to move the interest rate around, saying, okay, we're trying to get it to not hurt the stock market, but low inflation. This is one of those things. It's a hard line. If it gets to here, we will intervene. So it's kind of almost an if this then that type trade. Like, it's like a set and forget trade, like a limit order, right? Limit order says, get me in at this price or better. It's kind of the same scenario here. If the price goes up, they are going to intervene because they know that it hurts them right away. So by them raising interest rates, it's what everybody else in the rest of the world's doing. It's not anything that's super uncommon. And again, talking about this, again, gold starting to get kind of beat around a little bit. Silver starting to take the same type of falls. That's important. Now, the VIX is down today. We do actually have some, I would say, not major headlines, but still some things there. And again, I think this is going to play. This is how the game is progressing. I don't have a crystal ball, right? One of the things that we got out of the Kremlin today is that the Ukraine keeps having a tendency to go back on what they've agreed upon. We know that this is the truth. This is not propaganda. There was, and the example is Crimea. They had agreed that they were going to, discuss and have a formal talks about Crimea in 15 years, and then they got to the next stage of the negotiation, and the Ukraine went backwards and said, no, forget that we said that. They're basically just saying that, listen, we agreed on something, we moved to the next stage of talks, and then we get to the next stage of talks, and we have to go backwards again. It's not helpful. And again, there's some commentary about it. Again, they're using the Israeli officer as kind of the go-between on this one, which, again, that any kind of avenue for them to talk, I think, is great. But they did say that we have a document, we passed it to their side. We're trying to we're trying to pass peace into this next level of direction. We'll see where we go. That's lowering the VIX. At the same time, it's kind of, and this is actually kind of a funny one. Germany, the foreign minister is like, hey, we've delivered a large number of weapons, but we haven't told the public yet. We haven't disclosed it yet, guys, what we're giving across, right? And this statement right here, I love. He says, delivering weapons does not make us part of a party in the war. You can say that, but if the person on the other side says you're funding, there's no difference. If you fund terrorism, that makes you part of terrorism. That is what the United States believes. That's why we've gone into other countries for war ourselves. If you fund terrorism, you're the same as terrorism. Same thing. If you drive the bank robber to the bank, you are also considered the bank robber. By giving weapons, Russia is going to consider them the same. Why I'm bringing this up? Remember that natural gas thing that we talked about? The natural gas thing is going to come up. The more they try to stick it to them, the second that they feel like they've milked them for everything they can, Russia's turning that spigot off, and they have 2 weeks to do it. So natural gas is another one of those ones that we are getting a bit of a, little bit of a reprieve. We're back down at 7, but we had talked about that level and talked about it punching higher. It's dropping now, and again, peace talk is great because if there's peace, they won't turn the spigot off. So I think that's why we're seeing this drop right now, but you can see it was really starting to bounce off this level. And again, I think there will be shorts in here. I think below 690 is still an opportunity for us to take a kind of a short-term short. But right now, you can see on these spikes, we had one spike here, we had one spike here, and then we had one spike up. So the spikes are getting higher, higher, and higher. I think 760 is the next one. Wouldn't be surprised if this pops up, particularly for inventory. Now, we do have inventory today.
Yep.
Oil.
I was about to say
Yep.
that.
Yeah, we do have oil inventory today. The API number actually came in with a little bit of a down draw. They were expected to have a surplus. And again, this just shows you how accurate these forecasts are. And this is why, again, something like Nadex is great because, if you had been banking on like a really big surplus or really big, if the market factors in 2.5 million barrels and it's down, this is a miss of about 6 million barrels. I'm telling you, there's one of those little spider monkeys from Outbreak throwing things that they have no clue what it actually is. So, today we've gotten a little bit of a pullback, and again, I had to switch charts. Obviously, this U.S. oil one is not connected anymore for some reason. I don't know why, but I can pull the CL chart, and again, it is pulled back, and CL is back down at 103. It was up at the 108 range yesterday. But what's interesting about that is we're getting really, really close to that 50% mark here.
Yep.
The market saw the API news, and that came in right here. Okay, right here. It didn't do a whole lot. It should have been great for oil, and it popped it up a little bit. It didn't really, really do much. So I'm very curious to see today what happens with the price of oil. And looking at this right now, yeah, the highs are getting there and the lows, so it is kind of channeling higher. But what I'm looking at is there's an area here we've bounced price off of. If we take the next level here, you can see price bounce off of that one. If we take the next level here, prices bounced off of that one. There's a lot of buyers accumulating right below this. If we can maintain a low kind of push down into one of these areas of buyers, if we look to the left, there's not much here until we go all the way back up, and that's sitting back at 105 or 106 actually, 105.96. So right up there. So there could be a nice little explosion today. And again, the big question is, if this number is actually true, when we do get a huge forecast, or we do get that huge number, and again, it doesn't always match up. It's not one of those things that it's like, yeah, it's normally pretty close. Right now, they're actually saying they're expecting a 3 million barrel surplus. The API number was only 2.5. If this comes in at 4.6, that's a 7 million barrel difference. It's hard to say on a fundamental basis that's not going to send us higher. Right?
Yeah.
The Europeans haven't really foreshadowed what they're going to see yet, besides it starting to push down into the U.S. session. So could be a great opportunity. Remember, go to your 35 and 1. That's going to be the way to handle that one. And then
I just want everyone to remember that is at 9:30 Eastern. We've got those oil inventory reports in the U.S. Oh, by the way, we just got a question. U.S. sending oil reserves to Germany. I don't believe we sent oil reserves to Germany. I do believe we're sending nat gas. Yeah, we're sending nat gas.
Yeah, it's a little bit. We don't have a lot to send them, so we
right,
have a
but we
little
are
bit
sending
to help
nat
them,
gas. They can liquefy it, and they can ship nat gas on a boat and send that over. Not a long-term solution, but that we are the U.S. is doing that.
Yeah, they're trying to do it right now. But again, it's one of those things. It's a good measure. It looks great for headline. It can't even remotely scratch the surface of replacing the amount that Russia is sending into Germany. So, but Germany is already starting to use energy rationing, and the big question is whether they turn it off or not.
Right.
If they because remember we do have reports that the gas is flowing backwards in some regions, but not all of them. But the payments are due in the next 2 to 3 weeks. If they don't pay, again, this is like anything else. If you get a service and you don't pay, they cut the service off. I mean,
There's gonna be some volatility. Well, we're gonna see
yeah,
what
it's gonna be crazy. Yeah, it's gonna get
this
nuts.
this war is not over yet, and the consequences of it will still have repercussions. All right, the other thing we haven't really had a chance to get into yet, because we did talk
Indices.
a bit, is the indices. I mean,
Mhm.
I can't believe they're shaking this off. I mean, a
Right,
30.
right now so far, yeah. I mean, the VIX is obviously down. There's not many. I mean, again, Bullard speaking, the market is kind of used to Bullard speaking at this point. The Fed is way behind what Bullard is doing. IMF have made those comments as well. But again, the volatility, and again, if we are moving forward in peace talks, that's technically a good thing, right? Um, you know, one of the things about Netflix being down, it's kind of one of those, and this is a weird kind of phenomenon we're having right now, that good is bad and bad is good. Yes, Netflix is bad. Why are people not, dealing with subscription services? Well, because they're getting out of their houses and they're spending the money elsewhere. They're going
Yeah,
back out to movie theaters and they're going other places. So, yeah, it stings for Netflix, right? It stings for Disney, but it's because they're going out and they're actually doing things again. But
I
again,
don't
that
know.
goes,
Everyone says it stinks for Disney. Uh yeah, Disney might lose on some subscribers, but people are going to be flooding their parks.
yeah.
They're not going to fit all the people that want to get in there into the park. So
Yeah, I mean, I'm not a huge Disney fan. So
you don't like
it's
Disneyland? It's the happiest place on earth.
it's
I'd
not that
live there if I could.
it's not that yeah, I mean, it's an interesting experience. I don't like what Disney's done with Star Wars. I'm a Star Wars fan, so I feel like I don't know. I it just, it's a very hard feeling. It's like, why are you taking and ruining things? And you have all this data, all these great stories, and what'd you do? You're messing it up, and you got to rewrite it again because you're Disney. And I'm just
Well, The
not a big
Mandalorian
fan.
was pretty entertaining.
Yeah, it's
I don't
okay.
My
It's
sons,
all right.
they like the bad guys. They like Boba Fett and Jango Fett and Zurg from
Yeah,
Toy Story.
yeah,
So,
yeah. So,
I don't know.
but anyway, because of that, again, yesterday we saw a major rally, and we talked about this. The VIX is a fear index. When the fear is down, the VIX lowers down itself. Again, remember, it is on options in the ES. Options market kind of has a pulse on the finger. So, or the finger on the pulse. Right now, there's not. I mean, they're not raising interest rates this week. So, could there be short-term gains? Sure, absolutely. We know the Fed has been very, very slow. They're not talking about this 0.5 a lot. They should be, right? They should be factoring into the market, but there's only one person really talking about it. So, because everything is down, and again, maybe there is peace and things like that. Again, we saw a huge rally up in price. Now we are at levels now where we have seen some selling. Does that mean it's going to be a negative day? The reality is, what is the catalyst for it? There's just not a lot. Now, certain things may be a little bit, a little bit more difficult. I mean, again, the last time price was up here in the NQ, we saw it roll, and it's starting to kind of base now as well. And could it pull back? Sure. I mean, from its last major push yesterday, you can see that 50% level is an area where we definitely have some buyers coming in there. So, um, move this over to here. There's definitely some areas now where we're kind of looking at this and saying, all right, is the profit taking in? What are we going to get? What type of reversals? I mean, the European market, this literally took off at 3 o'clock. Did nothing but send it straight up. It's kind of like, do they know something? Are we going to hear some news today? Is it going to turn back and roll? And again, remember, things like Netflix is going to weigh on some of the, some things like the NQ. YM also, I mean, YM, we talked about a potential move off this one. It did. It pulled back down again and then started the base and found more buyers and actually pushed back up. It has not come back down to the 34,500, which is great. And again, you can see this level is a lot of drama inside
It
that
finally
level.
broke through it. Yeah.
Yeah, but if we look what the price is now, this is where this old fund on the FIB level is drawn. We're dealing with all this, so there's a bunch of kind of drama over there, and then the Russell. I think the Russell is kind of the best place to look at it right now. And again, remember, the Russell is going to be the one that's most sensitive to interest rates, and you can see it. Huge spike up. We really kind of stabilized ourselves and based a bit, and then again punched even higher through a level that had been tested. I mean, we got kind of hit it here and hit it here, and then kind of hit it again in base. It's like, yeah, it's going to break. But now we're also seeing it kind of start to go over. And I would say, hey, listen, there's a lot of basing sitting right there, and there's a racetrack. It may not be a today-based trade. I mean, I don't know if it's going to turn and roll this quickly, but this is something that I would kind of keep on your radar and say, this is a parabolic move. There is a retracement there. There should be a Harry Potter break through it. Um, I don't know when. I mean, like I said, I don't have a crystal ball, but I do know based off, this pattern here, when we have a lot of basing, buyers supported, buyer supported, buyer supported, buyer supported, they don't last forever. Eventually, those buyers will disappear, and that's where we all of a sudden get a run all the way back down again. So this Russell trade could be a pretty nice trade. And again, we mentioned gold and silver just real fast. You can see the gold and silver took big drops. There's gold,
Yep.
came all the way down. Silver, we talked about it coming down, and it did tag finally that 24.85. We were sitting over here yesterday. We talked about it going further, and it did. And then the European sent it higher. And is that in preparation for the U.S. today? It could be, And then same thing. Cryptos are back at 42. It's kind of like, inflation, we're going to crush this down. It's going back into Bitcoin. And meanwhile, bonds, what are they doing? Yesterday, they ground down and they spiked up, but they're starting to push back lower. So, I mean, the story's out there. Again, it's going to be how do we curb this inflation that we're dealing with? How is it going to affect the economy? But at the same time, it's kind of good as bad. Netflix
Yeah.
is bad, but that should be technically good for the market. And we'll see if we get any additional headlines. But I think the thing to watch today is going to be crude oil at 10:30. Look to see what the price action looks like this morning. And again, even at the open, again, dropping down all these indices, drop them down to 15-minute charts, and where they're at right now. I mean, it's struggling. It's trying its best. But again, could there be a rollback down into this 44.62 area? I'd say absolutely.
Yeah.
And again,
And
even just small market fibs. Look at this. Your 50% just happens to be right where there's an area and a big explosion worth of price. So, could it come down and tag this today? Sure. Could that be a 10:30 reversal to end the screen? Yeah, absolutely could be.
yeah,
So,
and that's actually what I'm kind of thinking too. I mean, part of it is we know these interest rates are coming, these interest rate hikes. We're concerned what it's going. It's certainly going to impact things like gold. But interestingly enough, unlike Netflix, where people are going out and for their not going to be subscribing and things of that nature, as people are going back out, look at things like Procter and Gamble came out with their earnings today. They beat on the top and the bottom line on expectations. And that's even with the rate hikes. I mean, with inflation, they had to raise their prices, and they're still beating top and bottom line because people are are going to be buying those products.
again,
So
we don't leave our houses for 2 years. When you finally get out, you don't care what it costs. You're like, I'm doing it.
you're just going to go
We
and
haven't
do
I haven't
stuff.
vacationed I haven't vacationed in 2 years. This cruise costs twice as much. I don't care. I didn't go out for 2 years. I'm spending the money. You know?
People are spending. So for
Yeah.
companies that it's the markets rising interest rates you would think would crush the markets. It might not crush the markets. It could already be priced in, or people
Not
are
yet.
willing to absorb it this time because of the circumstances. It's a
Yep.
relatively unique set of
But
circumstances
if,
right
but
now.
eventually, I mean, again, we can continue to push things down the road. Eventually, you got to pay the
It
piper. So yeah,
yeah,
everybody's paying more, but
eventually, right.
eventually they're going to run out of stuff, and we either go back into debt, we go into a recession. And the problem is, if people spend these high prices, how often is it the company's like, you know what? We'll lower prices. It doesn't
Yeah,
cost us
that
anything
never
to leave the prices
happens.
this high.
Right.
So it's like if we get stuck at 40-year high inflationary prices and then we go into the natural progression of a recession as they're raising interest rates to stop it from going even higher,
Yep.
now we got a recession, overpriced goods and services, and we know that personal spending, again, it will have to slow down, but the average hourly earning rate is also crappy.
Now,
It hasn't kept up with inflation.
what
So,
all that means, volatility in the markets, great trading
mhm.
opportunity.
Yep.
So
Yeah.
we're getting some of that. We're getting a little bit of a taste of that today.
Yeah.
With that, any questions for Nadex? If you got questions for Nadex about your account, the platform, the products, anything, please email us. Customer service at nadex.com. We're here to help. Brian and I are also very accessible. If anyone has any questions, you want to reach out to Brian. He is a great mentor, really understands these markets. If you need some help from Brian, please email him. Support@keeptradingsimple.com. Support@keeptradingsimple.com. I'm also available if you'd like to vent your frustrations, concerns, or share things that you like or you'd like to see more or less of. Todd.rich@nadex.com. And we did go over a lot. We ran a little long today, but there was a lot to discuss. Rising interest rates. We are seeing that impact the commodities. We're seeing that in gold and silver. The yen hitting high, 2-decade highs, and now the debates happening over there between their central bank who is saying we're going to keep buying assets and keep quantitative easing, and their finance minister saying, wait, 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 this is getting a little out of hand. We're seeing differences, variations in the equities markets. Clearly, with the Netflix earnings doing one thing, and then Procter and Gamble doing another. IBM also in there. So great volatility in the markets. So a lot of places to be looking into trade. Remember, we have that oil inventory 9:30 Eastern, 10:30 Central. Brian and I will be back tomorrow morning. Thank you so much for joining us. If you like what we're doing, please give us a like on Facebook or on YouTube or both. We do appreciate that. We will catch you again tomorrow. And until then, good luck in the markets.